Good morning, everybody. I know that usually you're used to me starting off the briefing by saying that I hope that you all had a good weekend. Well, given that today's Labour Day and most of you are going to be off, I hope that you're still having a good weekend. Apologies for the slightly unusual background today. I'm in Hanoi at the moment, and my hotel room, nice enough, but rather small, shall we say. Anyway, last week, markets. Overall, the picture looked fairly flat with the Dow down 1.3%, FTSE down 1.3%, and the Shanghai down 0.8%. We did see some more volatility in the tech side of things, with the Nasdaq down 2.7% and the bundle of four down 3%. Now, I know that doesn't seem like much of a difference, but when you actually drill down and analyse it, you saw some big movements upwards for Facebook. We saw Facebook up 6.4%. We saw Apple down 11.3%, Microsoft down 3.7%, and Alphabet down 3.6%. I happened to buy some Facebook the other week. Very, very happy with my 5-6% gain I've made in a very short period of time. I also happened to sell some Apple for myself personally. Albeit, it wasn't I'm trying to play the markets, it was just simply a balancing act. I'd have Apple at $90, I'd have Apple at $100, I'd have Apple at $110. So if you are in the market right now, certainly down at $93 after last week's hiding, for want of a better word, is a time to buy. The Nikkei was down 8.3%. Now, this really is a volatile space to be in at the moment. I think I've mentioned before that I don't understand the fundamentals of the Japanese market. And if you looked at my briefing last week when I spoke about possibly buying into a tracker there, it's probably a good job I didn't, given the fact that it's down 8.3% during the week. Some huge sways, and we're seeing the same with the currency as well. We saw the currency fall from 112 to 108 this week, and over 4%. That's a gain. The dollar is down to 108 now. It was 112. So that's not what the Japanese want. Japanese want their yen to be weaker in order to encourage exports. The other currencies, we're seeing a steady increase in sterling versus the US dollar. That's now been happening for a couple of months. In fact, if you look at my briefings over the last few weeks, I've often said about sterling being a good buy because it's undervalued, and in fact you would have made 6% on that had you bought in the end of February when it hit its low of 138 against the dollar. The euro as well has climbed steadily, and you could have made 4.5% on that had you bought in when euro was at its low against the dollar. They're sitting now respectively sterling 146 and euro 115. So still probably consider what is a strong US dollar, but certainly those two currencies have seen some traction in the last sort of 6 to 8 weeks. Stories again, sad stories. BHS, last week I spoke about Tata on the pension side of things. I don't know if anything's happened there. I don't know if there's any wrongdoing by Philip Green. Nobody knows, but ultimately there's a pension scheme there that there's going to be people that are probably not going to be able to get their money out of. Anybody who's got any pension scheme which is in a company and they're living overseas, you need to get it out of those. You need to get it into something you have control of and don't lose your money. I know I've said it before, but it's obvious now. This PFF can only support so many companies. It's not a miracle worker. So on the sporting side, we saw Leicester manage to get a draw against Manchester United. So unless Spurs win tonight, then the fairy tale happens and they become the Premiership champions. We've got potentially the first ever Asian World Snooker champion. We've got Ding Junhui in the final against Mark Selby. So we'll see how he gets on, and another step forward for the Chinese, I suppose, to have a snooker world champion should he come through. I mean, just to go back again about my Apple and Facebook story, and I know I may sound like a bore talking about these sort of companies all the time, but there's 1.65 billion people that use Facebook, and 92% of them use it on a mobile device. Apple's got only 2% of the Indian smartphone market. These are two companies, again, the growth is there for all to see. I spoke last week about, or a couple of weeks ago, about, only half the world having internet access, and Google and Facebook assisting that process, and they're able to provide the solutions as well. So, all in all, longer term, you're not going to go far wrong. So our quote for the day is from Ben Graham, a legendary investor and writer, and perhaps a mentor of Warren Buffett. And one of his comments is, an investor's worst enemy is not the stock market, but his emotions. So there we go. That's what it is. It's an emotional game. Don't get too caught up in it. Understand the fundamentals of companies. Understand you have good, sound, solid investments. That's how you'll achieve long-term capital sustainable growth. Okay. Enjoy the rest of your day off if you haven't one. Enjoy the rest of your week. Bye.